Welcome to Washington Policy on the Go. My name is David Bose. I'm the Communications Director for Washington Policy Center. Today we'll be speaking about some new net neutrality developments and the upcoming legislative session. But first, we're going to be joined by our former longtime research vice president, now part-time, semi-retired guru emeritus, Paul Guppy, to talk about something new happening in Washington State. Before we get into that, I do want to just give a quick update what's going to happen over the course of the next couple of months. With the legislative session starting up January 13th, we'll be with you every Tuesday with an update for Washington Policy on the Go. We'll send out a reminder a couple of days in advance, and we're hoping that you will send that reminder out to other people as well, so that we get as many people as possible aware of what's happening in the legislative session. And then we'll be telling you ways that you can interact with the legislature. We do have remote testimony available for people now. We want to make sure that people know how to use that and are able to speak about the things that they're passionate about directly to legislators. So we'll be sharing that information with you as well. So again, legislative session starts next on the 13th of January. Next week, we will be coming to you every Tuesday until the legislative session is over, which means, we'll see every week until April. And then you'll have the chance to share the information with others as well. We're also having live events. So the third Tuesday of this month, we'll be doing a Washington Policy on the Go live here at our offices in Seattle. So if you'd like to come to that, we'd welcome you. I'd be excited to see you. For those of you who are downtown Seattle and want to bring your lunch, feel free. If you've got a potato chip bag, you might want to empty it out ahead of time so we don't get too much of that. But we got plenty of room. Come on down to the Washington Policy Center offices, and we will have a live Washington Policy on the Go in the big conference room on the first floor. And you'll have all the details on that coming up as well, so stay tuned. Right now, I want to have Paul Guppy join us. Paul, Governor Insley, on his way out, has proposed a new tax on the wealthy, a wealth tax. But this isn't the usual kind of wealth tax. Why don't you describe for us just how encompassing this new wealth tax would be?
Yeah, this is really a uniquely bad idea in the world of tax policy. And the reason is because, as everyone knows, a fair tax system is based on some kind of rational principle or policy for generating revenue for the government to provide the public services that we all need. This so-called wealth tax does not fall into that category at all. It is completely invented out of the air. There is no defining policy principle or need for this idea. And therefore, by default, in analyzing it, anyone can pretty much see that it's based simply on envy or jealousy. The fact that some people have a certain amount of wealth and that the government is going to take it. That's all there is to it. So the mechanics of what Insley is proposing is a 1% tax on any resident of Washington State, and he has developed a target list of 3,400 people to whom this tax would apply, based on their global wealth holdings of any kind in any location on the planet of more than $100 million or more. The reason he picked that number is because it seems so incredibly high that, hey, this is going to be really popular because, hey, I'm socking it to the rich. But what's important to me is the motivation behind this tax, and that is it's purely based on selecting a target group of people, taxing them on their, again, quote, wealth. This is not realized gains. It's not profits. It's not income. This is just a person's total net wealth. So that violates all kinds of tax principles right there. And then
you jumped ahead of me there, because that's what I was thinking too. When I first read about it, it's like, it's not even, it's paper wealth. Like there's plenty of people who have had businesses that were wildly successful and on paper they're worth a ton of money. And then suddenly, ask the stockholders of Blockbuster, which was once the dominant home movie experience for people. Suddenly it's not worth so much. So, the fact that this deals with unrealized gains is an even greater, punishment toward people who are creating things and have things around the globe. Plus, what does it have to do if I have a castle in Scotland and I'm a rich person here? Why is Washington State able to tax me on a castle in Scotland?
Yeah, and so that's the fairness principle. and it's also the practical problem. And Nick Hanauer, who's a billionaire, very much on the left. President Macron of France has also commented on this, very much on the left. And in both cases, they made the same observation. Rich people will just move. And we've already seen Jeff Bezos change his residency from Seattle to Florida to avoid the pretty harsh capital gains tax that we already have. The wealth tax would have the same effect. But the other part of it that is disturbing to me is, again, the motivation of the politicians that are proposing this, because Washington State does not need the money. Their revenues are rising. They talk about having a shortfall all the time, but that's because overspending is outstripping the increase in revenue. So in the private sector, most people would look at the Washington State finances and they are flush. They have ample money. They're very much in the black. But in Olympia, they act as if they have this huge deficit that they're facing. So Washington State has plenty of money going forward to fund public services, which puts into context the question of why propose this new, it's kind of this mean-spirited wealth tax for the privilege of living in Washington State.
How would this work if they taxed someone for their global wealth 1 year, their paid wealth, and let's say, the next year they grew a little bit, would they tax all the same thing all over again? Would it be an annual thing?
Yeah, as I understand it, the bill it's a 1% levy on everything that you own every year. Okay, so you do an accounting of your, it's like the way a business does inventory. What is the not even the net worth, what is the gross worth of the company or the individual, and then you pay 1% on that. So it is a harsh tax. And
if it goes down, you get the money back, right? If it goes under 100 million,
you just pay a little bit less. But rather than, one thing about being a policy analyst is that you end up in the situation of having to kind of explain or rationalize somebody else's bad idea. So if you want to wonder what the real world impact of this is going to be, and defend it, go ask Insley. He's the guy that's proposing it. What we observe as an independent organization is how it's driven by this kind of envy of other people's success purely for the privilege of having a residence in Washington State. And as I pointed out earlier, if you're a wealthy person at that level, changing your residence is extremely easy. So I don't know how he came up with his hit list of 3,400 Washingtonians, but that number of people would not pay this tax, even if it went into effect.
It's it's a strange thing where when you have Nick Hanauer agreeing with Washington Policy Center as far as what's the impact of this policy? The people targeted will move, right? I mean, that's what will happen. Easy change of residency, not a big deal for them. So, again, it's one of those things where even if you wanted to punish the, quote unquote, the rich, you'd have to understand if you drive them out of the state, you're giving up on philanthropic gifts to the symphony, to schools, to the Union Gospel Mission, to just every charity that you can imagine, cancer research centers and others. That is a major negative consequence to the state. That's a little outside of the scope maybe of what they're looking at as far as direct impacts, but indirect impacts are serious and troublesome.
Yeah, that's true. But of course, the public officials who want to take this money, they would say, well, don't worry about it because the wealth comes to us in the government and then we go out and do good things with it. So that's why the practical economic argument against higher taxes often doesn't work for people on the left, because people on the left think that those in government are virtuous and are going to do beautiful things with this money that the people who earned it are not going to do. But I've noticed with public budgeting that there is as much greed and envy in the public sector as there is in the private sector. So you think Jay Insley, once is going to be a perfect decision maker, or the state legislature, about what to do with this wealth? And the answer is no. That's why I say that it's a mean-spirited proposal. The government doesn't need the revenue. Okay, they have tax revenue, which is rising. And I think they're just putting this in place because they want to go after people who they believe do not deserve to own their own money.
Well, and that brings us to the follow-up questions. Insley is obviously, with the election, he didn't run for re-election. He's a lame duck at this point. He's throwing these proposals out there. the legislature is not going to be, following an Insley agenda at this point. It'll be Bob Ferguson. What's the response so far of the governor-elect to the Insley proposals?
Yeah, there are three indicators. Two are negative and one is positive. The positive one is this exact bill was introduced in the last session when Democrats had a majority. They still have a majority when Insley was governor, and this bill was crushed in committee. We presented our analysis against it, and that bill did not pass and gained no traction. The two other indicators, however, are a little more worrisome for the future. One is that Bob Ferguson's transition office has, when asked about this issue, said, we're looking at it. We're thinking about it. So they did not reject the idea of considering a wealth tax. Is very much on the table as far as our incoming governor is concerned. And then the third indicator is that unlike past governors who have run for re-election, Bob Ferguson did not run on a commitment to not raise taxes. Quite the opposite. He appears to be anxious to impose some kind of new tax increase. He's not shy about that at all. And this could be one of the new taxes that he's considering.
We have a question from the audience. Is Insley setting himself up? Maybe this is a thing for POTUS in 2026. The progressive left would love it. Liberals wouldn't. Progress. Well, basically it's all political rhetoric, and this whole thing is based on political futures. Well, as you point out, we can't look into. He's shown ambitions in that direction in the past, right. But who knows? Yeah, who knows?
Yeah, again, as a researcher, I just go to the data. Even on a question like this about Jay Insley running for president, as you point out, he has done it before, so he's been market tested out there in the national politics, and he got less than 1% support in the Democratic primary. So that's pretty poor, and so I would not expect his prospects would be any better if he tried to run for president again.
Then again, the world is full of strange things these days. Mark is asking, how often are capital gain excise tax receipts reported?
Well, every year. It's just one of the many sources of, the state government has over 50 taxes that they levy on us, and the capital gains tax just added to it. Actually, it's probably more than 50 now. I do know that Jay Insley, according to the Association of Washington Business, during his 12-year tenure, added 22 new taxes to the tax code. And capital gains is one of the latest ones, and a wealth tax would be added onto the pile.
Richard points out, consider $100 million in assets and 7% income per year at the highest rate of 37% federal tax would be 2.6 million. The Washington tax on assets would be 1 million. So
that's great.
Yeah.
Yeah, I admire that math of working through it. But what that does is illustrate the cumulative effect of taxes at different levels of government. And even though for the rest of us, the dollar figures are smaller than that, the effect is the same. You have state, local, federal taxes all piled on top of each other, and they are all coming out of one family income or one small business budget. And that's what individual politicians try to avoid, that, like they're not responsible for all the taxes you pay, but it does add up to be a cumulative burden on the average person.
We have an anonymous question about Representative Amy Whalen. She's a liberal on the House Finance Committee, owns car dealerships. And the question is, would those car dealerships, the total value of those dealerships maybe bring her into that area because of the value of all the cars, or would there be some kind of carve out for car dealers, like some carve outs that they get with other taxes? That's a good question. I mean, it's not there yet. It's an Insley proposal, but yeah, would there be some kind of carve outs for certain categories of people?
Yeah, that's a great question, because it gets to the sausage making in the legislature when they put together the details of these bills. And in the case of Amy Whalen and the car dealerships that she owns, she already arranged to exempt her own businesses from the capital gains tax. So that's a suspicious move that she made. Most people never hear about that. The capital gains tax went through, but she got a special carve out on that tax already. So given her powerful position on the Finance Committee, I would assume that she would make this similar sweetheart arrangement for herself and other businesses that are like that if a wealth tax went forward. Again, these are details that are hashed out in committee, and as Washington Policy Center knows, because we follow this day by day, it's very hard to find out what little sweetheart arrangement has been inserted into a tax bill that favors particular members of the legislature.
Well, thanks, Paul. I appreciate it. I know you've got other things on your agenda today, but appreciate you making the time for Washington Policy on the Go.
You bet. Thanks a lot, Dave.
Thanks.